You got out of the shower again this morning and decided it's time to add some more bank accounts to your profit first strategy. So here I am talking to people who are not just going straight in and setting up everything in profit first. I'm talking to the people who want to test the waters a little bit first and gradually work their way into a profit first cash flow implementation. So here we go. Today I'm going to talk about two accounts. The first one is the tax account. So with the tax account, that's for your end of year tax. In a company sometimes gets asked to make installments every quarter, PAYG installments. They can be paid from this account, and this account you are taking, in an ideal situation, your target is 15% off the top of all this income that comes in, and you're popping it into this tax account. Now, if you're using tax minimization strategies, the legal strategies to generate wealth and minimize your tax, then you're going to probably have a little bit of a surplus in this particular account. And that's fine, because then this account can be used also to pay your accountant, which is what I encourage all my clients to do. So that way the tax account is putting the funds aside for end of year tax and also covering the accountant's fee at the end of the year as well. So your accountant's happy, you're happy, and you're making progress. Now, the other account is the GST account. So in the book, Mike talks about having hold accounts, and you can have a tax hold account for the tax account that we've just created, and you can also have a GST hold account. So I call it a BAS hold, just so that way the names are a little bit different. So the GST account is the very first account that gets a distribution, because in Australia we've got GST. So 10% off all the deposits that come in go straight into this GST account, and keep that as a transaction account. And then the other things that I pop into this GST account when you do payroll, that PAYG that you are paying to the tax office, I also pop that in. So after payroll, have the PAYG going into the GST account. And at the moment, super is also a compliance that's not done on payday, but from 1 July, it's payday super. So just this little period now, between now and June 30, when you need to put that super money aside, also put that into the GST account. So now your GST account has GST, and it also has your compliance for PAYG and super. So now you can do one transfer and just send it all to your BAS hold account. So then that way it's just sitting there for when you need to pay your BAS and to pay your super. And then you just transfer it back to the GST transaction account and have that being paid to the tax office or to the super clearing house. And that's a very simple strategy for managing your compliance and managing your tax accounts with Profit First.